Welcome. In this video, how many ZBCN do you need for $100K? We will analyze this. Don't forget to subscribe, like, and please watch till the end to understand.
But first, let's analyze Zbcn. One of the most closely observed and important structures in technical analysis within the cryptocurrency markets is the rising curves, or more technically, parabolic ascending channels. These structures are signs of strong trends where the price consistently increases and accelerates over time. Especially during periods when investor sentiment turns positive, buyers gain control, and the supply-demand balance shifts in favor of the bulls. Such rising curves become clearly visible on charts. The key characteristic of these curves is that the price moves within a certain arc, occasionally touching the lower boundary, acting as support, and bouncing back upward with strong buying reactions. These reactions, referred to as bounces in technical analysis, are highly valuable. The presence of a rising curve indicates that the price is displaying an increasingly accelerated upward movement. Unlike classic ascending trends, drawn with straight lines, these curves offer a more parabolic appearance. The price progressing with repeated bounces along this curve paints a positive technical picture for investors. This behavior signals that the market is rising in a healthy manner and that correction moves are limited. Each time the price touches the curve, upward movement begins again due to buyers entering from the lower levels, ensuring the curve's continuity. In such a structure, the most important strategy for investors is to use the curve as support and maintain their positions as long as the price does not break below it. Each touch of the curve demonstrates that the uptrend remains intact. These touches provide investors with both confidence and new buying opportunities. Technical analysts often identify the presence of such curves by observing a series of higher lows and higher highs in price. Additionally, these curves serve as crucial roadmaps for trend-following investors to optimize their positions. In parabolic ascending structures, momentum typically increases. Rising momentum means prices climb higher in a shorter time frame. In this scenario, the curve steepens, indicating acceleration in price movement. However, as with any sharp rise, there are some technical elements that must be monitored carefully. For example, if the price moves too far away from the curve, a short-term correction becomes more likely. Therefore, investors should prefer the price to stay close to the curve and rise in a controlled bouncing manner. If the price is advancing along this rising curve and consistently reacts upward after touching it, this shows that investor confidence in the market is high. The curve visually represents buying pressure. The price bouncing repeatedly along the curve confirms that buyers re-enter the market during each pullback and sustain the upward momentum. Such structures also signal strategic entry points for large investors, known as smart money. These investors consider the price staying above a rising curve as a positive signal. As a result, whenever the price approaches the lower band of the curve, they make new purchases, supporting the price action. This strategy creates a solid support base in the market and helps the uptrend continue in a healthy manner. Rising curves also help regulate emotional investor behavior. When the price nears the boundaries of the curve, short-term investors often take profits. However, medium and long-term investors who recognize that the curve is holding tend to re-enter the market, viewing the correction as a buying opportunity. This behavioral cycle reflects structural strength in the market and forms a technically reliable bullish model. During movements along this curve, an increase in volume indicators is also commonly observed. Rising volume shows that more investors are participating in the market and that trade sizes are increasing. This serves as another positive technical signal supporting the strength of the trend. Movements within the curve that are supported by volume are more sustainable and provide investor confidence. Therefore, both staying within the curve and increasing trading volume are interpreted positively. The price bouncing along the rising curve also provides insights into the trend's speed. The steepness of the curve indicates how quickly the price is rising, while the frequency and depth of the bounces reveal the trend's health. If the price frequently touches the curve and reacts strongly, it shows the trend is robust. However, if the price starts drifting away from the curve, or if the reactions after touching it become weaker, it may suggest that the trend is slowing down or that a new structure could be forming. In conclusion, a rising curve is a positive and reassuring structure in technical analysis. The price respecting this curve indicates that the trend is progressing healthily. Buying that occurs at each touchpoint reflects market confidence and investor interest. These structures serve as important guides, particularly in long-term investment strategies. Every time the curve holds, investors can strategize with greater certainty. Each bounce is a potential opportunity, and those who capitalize on them effectively can benefit the most from the upward trend. If the curve continues to act as support, the price is likely to reach much higher levels, making awareness of these structures a major advantage on the road to success in the crypto market. But we can't rely on the curve alone to make decisions. Let's take a look at the other metrics too. Stay tuned.
I'm interrupting the video for a moment, friends, because Bitunix Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus. And if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
The Elliott wave theory offers a highly effective and in-depth approach to technical analysis based on the psychological cycles inherently present in market movements. According to this theory, market prices move in a specific pattern of 5-wave impulsive movements followed by a 3-wave corrective structure. Especially in uptrends, the third wave is typically considered the strongest and longest wave. In this context, the scenario where the price is currently within the third wave indicates a highly positive and promising technical outlook. The 0.0024 level, considered as the target for the third wave, can be seen as a realistic objective, supported by both Fibonacci projections and the symmetry of past price movements. Reaching this level may present a significant return potential for investors. The strength of the third wave is usually the result of strong buying interest that emerges following the correction in the second wave. It is natural for the market to pull back during the second wave and for investors to hesitate. However, the third wave that follows signals renewed confidence and demand in the market. For this reason, the third wave is generally the most notable in terms of both volume and momentum. The fact that the price is currently within this third wave may indicate the early stages of a strong upward move. According to Elliott wave theory, the third wave is typically 1.5 to 2 times the length of the first wave, and sometimes even up to 3 times longer. In this context, the price reaching the 0.0024 level is entirely consistent with the nature of the current structure. It is possible for the price to face certain resistance levels before reaching this target. However, the momentum within the third wave may help overcome these resistances. At this stage, new participants typically enter the market. News flow becomes more positive, and overall sentiment strengthens in favor of a bullish outlook. In such an environment, buying demand increases, volume rises, and the price gains upward momentum naturally. The defining characteristic of the third wave is not only the rising price, but also the increasing investor confidence. While the market may be cautious and uncertain during the first 2 waves, the third wave is typically the period when the trend is widely recognized and buying activity accelerates. Therefore, the upward moves during this period are usually more stable and lasting. Particularly, the movement toward the 0.0024 level increases investor appetite and may lead to the influx of new capital into the market, which serves as an additional factor supporting the uptrend. Fibonacci projections are also highly important during this process. For example, a Fibonacci projection drawn from the top of the first wave to the bottom of the second wave typically targets the third wave at the golden ratio level of 1.618 or the 2.618 extension. The fact that the levels obtained through these calculations align with the 0.0024 target confirms the technical validity of this level.
These types of technical analyses help not only in identifying price targets, but also in understanding the nature of the path to those levels and the accompanying market psychology. During this period, the presence of supportive chart formations is also expected. For example, the development or completion of patterns like cup and handle, inverse head and shoulders, ascending channels, or bull flags during the third wave increases the credibility of the bullish scenario. As the price moves toward this level, breaking upward through trend lines, surpassing resistance levels, and forming a supportive volume profile demonstrate harmony with other areas of technical analysis. Especially the increase in volume is one of the most crucial confirming elements of the third wave, as volume represents the strength behind the price action and provides insight into the sustainability of the move. There are currently strong technical clues suggesting that the price is within the third wave. In particular, the clear identification of previous wave structures indicates that the third wave has either already started or is very close to starting. At this stage, the most important factor for investors to monitor is whether critical support levels are being maintained, as the third wave's healthy progression depends on the stability of the underlying structure.
For an investor targeting a return of $100,000, calculating the exact amount of Zbcn needed to reach this goal is a crucial part of strategic planning. These types of calculations not only show the potential future gains, but also help determine whether the current capital is sufficient to achieve the desired target. Let's now explain this calculation step by step and then examine in detail what these numbers mean from an investor's perspective. First, the total desired return is $100,000. This is a highly attractive target for a long-term investor and, if reached, could provide significant financial relief. However, simply wishing for or hoping to reach this target is not enough. It requires a strategic and mathematical approach. The first step is to divide the $100,000 target by the anticipated future price of the token. In this case, the target price is 0.0024. This figure is based on where we believe Zbcn could reach in the future, considering factors such as technical analysis, chart formations, pattern targets, and historical price behavior. When we divide $100,000 by 0.0024, we get approximately 41,666,666 Zbcn tokens. This is the number of tokens the investor needs to hold in their portfolio to reach the target. So, to achieve the goal of $100,000, the investor must own precisely 41,666,666 Zbcn tokens. This number may sound large, but given the low unit price of many tokens, dealing with high quantities is very common in the crypto market. Now let's look at how much money an investor would need to allocate to acquire this amount of tokens. At this point, the next step is to multiply the required number of tokens by the current price. Right now, the price of Zbcn is 0.0005. In other words, a single Zbcn token costs less than half a cent. This presents an opportunity for investors to accumulate a large amount of tokens. When we multiply 41,666,666 tokens by 0.0005, the total investment comes out to $20,833. In other words, an investor could purchase approximately 41.6 million Zbcn tokens today with a $20,833 investment. If the price of those holdings reaches the target level of 0.0024, their total value would become $100,000. That equates to a return of roughly 4.5x on the original investment. This is a highly attractive potential return by any investment standard. However, as with any investment, it's important to keep in mind that there are risks involved. The cryptocurrency market is highly volatile, so it may take time to reach the target price, or the price may not reach that level at all. However, based on current analysis, technical structures, chart patterns, and market expectations, this level is considered attainable. For someone considering this investment, the calculation can be highly motivating. A $20,833 investment could potentially turn into $100,000. These times of calculations not only show investors exactly how many tokens they need, but also help them plan their budgets more realistically. For example, if someone only has $10,000, they could buy half the required number of tokens and potentially earn $50,000 if the target price is reached. If their capital is lower, they can still expect a smaller return relative to the goal, but they can shape their investment decisions by calculating the potential return in advance. Furthermore, this strategy isn't just a mathematical exercise. It also serves as a tool for psychological motivation. When an investor has a tangible goal and a clear roadmap to reach it, they're more likely to move forward with intention and structure rather than making random buy-sell decisions. This is incredibly important for financial discipline. Disciplined investors are more likely to reach their goals by avoiding emotional decisions and acting with patience and determination. In this context, the Zbcn-based calculation sets an example for investors who are thinking strategically and planning for the long term rather than simply chasing short-term profits. Any investor aiming to reach a target like $100,000 should determine a realistic price target, calculate the number of tokens they need to own, and assess whether they can acquire that amount at current prices. This approach is one of the most effective ways to move forward with confidence in the investment world. Especially in a space like crypto, where there is both high potential and significant risk, acting based on clear calculations helps reduce uncertainty and allows investors to take positions with confidence. In conclusion, as this example shows, an investment of $20,833 could be sufficient to reach a $100,000 target. With that investment, an investor could purchase 41,666,666 Zbcn tokens, and if the target price of 0.0024 is reached, the total value of those assets would hit $100,000. This could be a major step forward for the investor in reaching their financial goals, and with proper planning, disciplined follow-through, and patience, the probability of achieving such targets increases significantly.
Yes, friends, I hope you like the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.